What if your money wasn't just, sitting still in an account somewhere, gathering dust? What if it was actually working for you, like earning real interest right now, and without any hidden fees or frustrating delays or piles of paperwork? Imagine a financial world where your digital assets aren't just numbers on a screen, but, well, dynamic capital, constantly growing. Welcome back to The Deep Dive. This is where we really try to cut through all the financial jargon and get right to the heart of what matters for you. Today, we're plunging into something that's, frankly, not just futuristic anymore. It's happening right now. On-chain lending markets, our mission. To unpack this pretty revolutionary technology called Loan Protocol, it's powered by the Metallicus platform. And we want to explain exactly how it's changing the game for digital asset utility, for you, the individual, and maybe even for the whole global financial scene.
Yeah, it's a really exciting time in finance, actually. And this deep dive feels incredibly relevant right now, what we're seeing with Loan Protocol. It isn't just a small tweak to how we handle money. It feels more like a foundational shift. At its core, I think it represents a vision for finance that's genuinely decentralized, but also fully compliant, that's key and accessible to everyone. So yeah, we can explore how this protocol is a pretty big leap forward, revealing how your digital assets can now serve you in, well, completely new and powerful ways.
Okay, let's unpack that for our listener. When we talk about on-chain lending markets and Loan Protocol, what is it exactly? At its core, how does this tech actually work for someone who wants to, put their digital assets to work?
Right. So at its most basic level, Loan Protocol is the underlying technology, robust, transparent tech that lets anyone, and I really do mean anyone with the right digital assets, to deposit those assets directly into secure lending markets and immediately, instantly start earning interest. Don't think of it like your old bank savings account, where you get a tiny fraction of a percent. It's more like a dynamic engine for your digital wealth.
Yeah.
Instead of your tokens just sitting there idly in a wallet, they're actively lent out within this blockchain secured environment, generating yield, growing your capital. And it's all completely transparent, completely verifiable on the blockchain.
That sounds incredibly efficient. But why haven't we seen this kind of thing take off in traditional finance? We're all used to waiting days for transfers, right? And dealing with all sorts of fees and often feeling like our money is sort of locked away. What makes Loan Protocol so different? This is where it gets really interesting, I think, because this isn't just a small improvement, is it? It sounds like a complete rethink.
You've nailed it. That's exactly why it's so revolutionary. It's not just an improvement. It's more like a paradigm shift. The real innovation is stripping away all those inefficiencies, the middlemen that just clog up traditional finance. Let's break down the key differences, the things that really set Loan Protocol apart. Okay, first, this is huge, no middlemen. Think about traditional banking. Every loan, every transfer involves banks, payment processors, clearing houses. Each one adds time, cost, complexity. Loan Protocol, because it's built on blockchain, uses smart contracts to automate all that. So no more waiting days for settlements or approvals. It's peer-to-peer, governed by code. This direct interaction that just eliminates delays and cuts down friction massively. Second, you get no hidden fees. We've all seen it, right? Those weird charges that eat into your returns on traditional accounts. With Loan Protocol, the transparency is, well, absolute. The economics are baked into the protocol itself. And crucially, all the transactions on the underlying XPR network have zero gas fees. Zero. That's a game changer. It means the yield you see is actually the yield you get. Clear, honest earnings.
No nasty surprises. And maybe the most powerful part for, democratizing finance. No barriers to entry. In the old financial world, getting access to lending or earning decent interest often means credit checks, minimum balances, where you live. With Loan Protocol, all you need is a Web3 wallet. That's it. It removes the gatekeepers, the paperwork, the kind of arbitrary hurdles. It really opens up global financial opportunities to basically anyone with internet and some digital assets. It genuinely levels the playing field.
Right. So for you listening right now, what does this mean practically? It means a system that's truly frictionless. You keep complete control, complete ownership of your assets the whole time. You're not handing your money over to some institution. You're interacting directly with the market. It empowers you with direct access to global liquidity, financial tools that used to be just for the big players. No more feeling like your money is trapped or you can't get to it easily. It's yours, totally under your command. Okay, so this isn't just some neat trick for earning a bit of extra interest. It sounds like it's tackling some serious, long-standing pain points in finance, both in traditional banking and maybe even in some of the earlier DeFi stuff. It feels like Loan Protocol is addressing these old problems head on. Can you maybe elaborate on those challenges and how this protocol solves them?
Absolutely. Yeah, the protocol is really designed as a direct answer to those core issues: inefficiency, lack of access, things that have held finance back. Let's dig into the challenges it overcomes and the specific benefits it brings. Okay, one big one is slow access to liquidity and returns. Traditional banking, as we said, is slow. Even in some early DeFi protocols, high transaction costs or network jams could make putting assets to work slow and, frankly, expensive. Loan Protocol offers instant access. You deposit today, you start earning today. Period. There's no processing delay, no waiting period. Your capital starts being productive the moment you commit it. That immediacy is pretty radical compared to the old ways. Another critical thing in any kind of finance, traditional or digital, is trust and security. We've seen scandals, hacks, opaque systems. It erodes confidence. Loan Protocol tackles this directly with security and transparency. The whole thing is built on the XPR network, which is an enterprise-grade blockchain, designed for high performance and, importantly, regulatory compliance. Every transaction, every deposit, every withdrawal, it's all recorded on this immutable public ledger. That means anyone can verify and audit all the activity. It fosters this incredible level of trust and accountability that you just don't get in closed, centralized systems.
That transparency part is huge. Okay, so when you mentioned the XPR network, for those listeners who might know about blockchain generally, but maybe not this specific ecosystem, can you give us a quick primer? What makes the XPR network a particularly good foundation for something like Loan Protocol?
Sure thing. So the XPR network is basically the foundational blockchain layer for the whole metal ecosystem. And it's different in a few key ways. Unlike, say, Bitcoin, which uses energy-heavy proof of work, or other chains that get bogged down with high gas fees, XPR network uses something called delegated proof of stake, or DPoS. And this is really key to its efficiency. DPoS allows for incredibly fast transactions. We're talking potentially thousands per second. And critically, it enables those zero gas fees for users. This isn't just saving a few pennies. It removes a major barrier, especially for smaller transactions. Makes it viable for everyday use, but also for big financial operations. Plus, the way it integrates smoothly with the rest of the Metal ecosystem, like the Metallicus exchange and the WebAuth wallet, it just creates a really user-friendly experience.
Right, that makes sense. So the zero gas fees come directly from how the network is built, making it fast and cheap to use. And when you mention WebAuth wallet and Metalix, just for anyone new, WebAuth wallet is basically your secure digital key, your non-custodial wallet for the XPR network, giving you full control. And Metalix is the platform where you manage things and interact with stuff like Loan Protocol. This whole ecosystem approach seems designed to just remove friction end to end.
Exactly. And that brings us to another massive challenge: scalability, or lack thereof. Legacy banking systems often creak under heavy transaction loads, right? And many early blockchains hit congestion problems too. Loan Protocol and the XPR network underneath it are built for scalability. This isn't just a niche thing for crypto geeks. It's engineered to support a huge range of users, from you, the individual retail user earning yield, all the way up to large institutional investors, and potentially, down the road, entire financial networks, maybe even central bank digital currencies. It's built for global scale.
What's really fascinating here is Loan Protocol isn't just tweaking existing systems. It feels like it's setting a whole new standard, especially in a world where just letting capital sit idle, well, that really means missed opportunity. When you think about inflation, the actual cost of just letting your digital assets sit in a wallet doing nothing becomes pretty significant. It's like, why would you let them just sit there when they could be generating yield instantly, transparently, without gas fees? This really feels like a shift, almost a financial responsibility shift. But I have to ask, with all these upsides, instant access, zero fees, transparency, are there risks or complexities listeners should know about? What are the potential trade-offs in this kind of decentralized lending world?
That's a really important question. Yeah, it's crucial for a deep dive. Look, while Loan Protocol offers huge advantages, it does operate in the broader digital asset world, and that space carries inherent risks. It's important to be clear about that. The main ones, common to most DeFi protocols really, include smart contract risk. While the code is audited and built carefully, any software could potentially have unforeseen bugs or vulnerabilities. Another is market volatility. The value of the digital assets themselves, the ones you deposit, can swing up and down quite a lot. That obviously affects the value of your deposit and the interest you earn. However, Loan Protocol's design on the XPR network, with its focus on compliance and robust tech, tries to mitigate these risks. For instance, by supporting stablecoins in its lending pools, which helps reduce that volatility concern for users. And the transparency of the blockchain means if issues do pop up, they can potentially be spotted and dealt with faster than in opaque traditional systems.
That's a really helpful distinction. Acknowledging the general risks, but also pointing out how the design tries to minimize them, especially with that compliance focus. Okay, so this clearly isn't just about earning passive income, is it? We seem to be talking about something much bigger here, something that could fundamentally change how global finance works, kind of bridging the gap between, well, two worlds that have been pretty separate until now.
Yeah, if we connect the dots here, Loan Protocol isn't just an app. It's more like fundamental infrastructure. It's actively redefining the global financial rails, as they say. Right now, traditional finance runs on these old legacy systems. They're slow, expensive, fragmented across borders. Imagine sending money internationally. No more waiting days and paying hefty fees. Instead, it settles in seconds for basically no cost. Or think about a small business maybe in a developing nation, usually cut off from global capital. Now they could potentially tap into lending pools instantly, boost their growth. Loan Protocol makes these kinds of scenarios seem, well, not just possible, but actually practical. And its role is especially important as the potential backbone of the new digital banking network, DDBN. You see traditional financial players, banks, credit unions, fintechs, they're inevitably going to adopt blockchain solutions more and more. It's happening. Protocols like Loan Protocol become kind of essential plumbing for that. Metallicus is really showing how compliant blockchain infrastructure, like the XPR network, can effectively bridge that gap.
Bring DeFi, decentralized finance, and TradFi, traditional finance, together. It's a bridge showing how these two worlds can merge into something more robust, more efficient, and accessible to everyone globally. And that word compliant is so important. It's what lets these regulated institutions feel comfortable engaging with this new tech.
That raises a big question then. What really happens when these two worlds, DeFi and TradFi, truly merge, not just conceptually, but through practical, compliant, scalable tech like Loan Protocol? It seems pretty clear that Marshall Hayner, the CEO of Metallicus, and his team are pushing forward with some exciting plans for Loan Protocol, which suggests this is really just the start of a much bigger journey towards that unified financial future. It's not just about individuals, is it? It sounds like whole economies could adopt this.
Precisely. Yeah, the implications are profound. This isn't really about replacing traditional finance completely. It's more about upgrading its core infrastructure. Imagine central banks exploring how to issue digital currencies that could instantly plug into compliant on-chain lending for, say, interbank stuff. Or think how international trade finance could be massively streamlined. Loan Protocol is like a practical blueprint showing how regulated players can integrate the speed, transparency, and efficiency of blockchain into what they already do, fostering innovation but maintaining stability. The future of finance isn't just digital, it's integrated, it's interoperable. And that's the path Loan Protocol is helping to pave.
That really paints a vivid picture. The scale of this potential transformation is huge. Okay, so if you're listening and you're intrigued, you're ready to maybe make your digital assets work for you, how easy is it to actually get started? What are the practical steps someone can take right now to check out Loan Protocol?
It's designed to be incredibly simple. Really, they've deliberately tried to remove the complexity. You don't need to be a blockchain whiz at all. It pretty much boils down to 3 easy steps. First, you just head over to Metallicus. You can get there easily through your WebAuth wallet. That wallet is your secure key to the XPR network and everything on it. Second, once you're on the Metallicus platform, you just deposit your digital assets, maybe stablecoins, for example, directly into the lending market you choose. The interface is pretty intuitive. It guides you through. And third, well, that's basically it. You instantly start earning yield right away. And remember, with the benefit of 0 gas fees on all your transactions, it really is that streamlined. Designed to be user-friendly, putting this power directly in your hands without jumping through hoops.
That's amazing, really, that mix of advanced tech with such an accessible experience. And for anyone who wants to dive even deeper, maybe look at the technical stuff or understand the compliance side better, you can learn a lot more about how Loan Protocol is changing lending by visiting expertnetwork.org/loan. We definitely recommend checking that out.
Yeah, and as you explore this, maybe think about how quickly this kind of seamless, compliant, integrated system could reshape our everyday financial lives. It's not just about earning interest, though that's great. It's about a fundamental shift in how value moves, how credit works, how capital flows globally, what other traditional financial services, mortgages, maybe even venture capital could be totally transformed by this kind of on-chain compliant infrastructure. This is just one really powerful piece of a much bigger puzzle, I think. And the implications for a more efficient, accessible, and transparent global economy, well, they're truly vast.
And that is our deep dive into Loan Protocol and the really exciting, fast-moving world of on-chain lending markets. Thanks so much for joining us today and letting us walk you through these, I think, pretty crucial insights. Our goal is always to equip you with knowledge that's hopefully quick to grasp, but also thorough, impactful, and gives you something to think about. We genuinely encourage you to consider how this tech might specifically change your own financial future and the way you interact with your assets day to day. The financial world is changing incredibly fast, and understanding these shifts isn't just interesting, it feels key to navigating what's coming next, for your own wealth and for the wider global economy. Until next time, keep exploring, keep learning, and keep asking those big questions.